Hello, crypto world. Welcome to the Chart Historian. My name is Justin, and on this channel, I delve deep into crypto charts, exploring chart structures, fractals, and patterns. Well, folks, this video is not going to be about crypto. It's going to be about the stock market, which is, in essence, really about crypto as well, because they're really tied together. So the chart that I have on the screen is the Dow Jones, and as you can see, the last day of trading, this was on Friday, it's now Sunday, we experienced quite the decline. For those of you who follow my channel, you're well aware of what I think about the Dow Jones and, by extension, the stock market. For those of you who do not know my analysis, now I've been saying this for a while. So the Dow Jones is following two really important fractals. I'm going to show you the first one, and in order to do that, I'm going to have to take you to the very beginning of the Dow Jones. Okay, so we're at the very beginning of the Dow Jones. The Dow Jones actually starts in 1896, and you can see this flat area, and then it has a peak. Well, that peak isn't just any old peak. That is the 1929 peak. The decline that comes after that is the 1929 crash, and it took several years for it to transpire. By the time it reached the bottom, it was 1932. What I would like to do is take this structure, the very beginning of the Dow Jones, all the way up to that 1929 peak, and even include the decline. I'd like to take that and copy and paste it on the part of the chart that comes after the decline. Now, I'm on a month candle, so this is a very big picture. However, if we were to just copy and paste this, it wouldn't make much sense. You wouldn't catch the connection between what took place before 1929 and the 1929 crash and what took place after. To show you that it is actually following this structure, we need to break it up into smaller digestible parts. So what I'm going to do is I'm going to place a series of boxes on the beginning part of this chart, and we're going to copy each one of those parts over, well, I've already copied it, but we'll copy parts onto the part of the chart that comes after the 1929 crash. Okay, so bam, here we go. These are those boxes. So it starts with this blue box. So if we were to take this blue box, copy this fractal, and paste it onto this part of the chart, it would look something like this. Let's zoom in. So you can see that it follows the basic idea. Now, I roughly stretched it to match the timing, height, and depth to this part of the chart. Now, I could go further and really try to adjust it just right, but this is a rough idea. You'll get the picture that what is happening is basically the same pattern taking place that took place before this crash right here. So let's look back at these boxes. So what comes next after this blue box is this purple box. So let's copy this fractal and paste it right here, this purple fractal. As you can see, while there are some differences, it does what it should do. It moves up. It even has the pullbacks along the way. Of course, the way it actually happens is a little different than the way it originally happened, but all the major parts are there. Let's look back. So what we have after this purple box is this gray box, and really it's a consolidation or an area of the chart where it goes flat. Well, if we copy that, we can see that it happens once again over here. And sure, there are some differences here and there, but overall it does what it should do. It goes flat, and it's a range-bound time. So what happens after that flat range-bound time? We get this red box over here, and it moves up. The index moves up in this one. So what happens after this gray consolidation? We get a move up, just like it should do. This move up, however, was quite impressive. It went quite a bit higher, and it even has the same little pullback. So in the fractal, you have this, you have that here in the chart. It moves up, and then let's look back, see what comes next. So we can see that we have this blue part right here. Let's take a look at that. So we can see that it's another kind of flat consolidation area. and we see that the Dow Jones follows the same basic idea. So after this blue box, it enters this purple box where the index moves up to its peak. And you can see that purple fractal, after this consolidation that takes place, it moves up to the peak. Today's chart has many similarities that the fractal has. So it moves up, it has this pullback on the fractal. We see that on the chart. It then has this angled part on today's chart, which we see on the fractal. Today's chart has this nasty pullback or decline right here before eventually moving up to another pullback, which we have the suggestion or hint of on the fractal before eventually moving up to what is potentially the peak. Now we have this sharp decline. So is that the beginning of this? What I'd like to do next is I'd like to look at a more recent fractal that the Dow Jones has also been following. Okay, so the next fractal or structure that I want to show you takes place from December 2018 to March 2020. And by the way, I'm no longer on a month candle, I'm on a 3-day candle. So this structure essentially consists of a run-up to a peak followed by a sharp decline. This decline is the C19 crash that took place. So if we were to take this fractal or structure and adjust it to the timing, height, and depth that we find on this part of the chart, this is what we get. Now, as you can see, it's a pretty close match. Of course, there are some differences, but that's to be expected. For example, right here, as you can see, it looks like we potentially have started on this decline. Before we assume that that is the case, it is possible that this chart or this fractal is playing out on a larger time frame. So we could potentially be doing something maybe similar to this. If so, it should move up and start working on this part of the fractal, this final peak. However, this decline is actually pretty intense, and it just kind of is much bigger than what you would expect from something like this. It's not to say that it can't happen, but as of now, I would say the evidence leans more towards it playing out potentially something like this. If it is playing out on the larger time frame, we really need to see a turnaround happen like next trading day or within the next few trading days. If it continues this slide, then I would assume that this structure is playing out at this scale. So let's talk about this decline. I want to remove this structure and compare this decline that we see from the C19 decline against the 1929 decline. Okay, so here we have both of the declines side by side. The red one is from 1929, and the blue one is the C19 decline. As you can see, they're essentially the same type of decline. So the fact that it has been following the move up to these declines, and it's been following them fairly closely, both the 1929 one, which has taken over 90 years so far to bring us to where we are today, as well as the C19 one, which has taken several years as well, since 2020. Both these structures produce this type of decline. So I would propose not to expect some slow decline where it moves down a little, then it moves up, and this gradual decline. That's not what these fractals tell us. Now, let's talk about what we don't know. So when a fractal repeats, the timing, height, and depth, all those are going to be original to the new iteration of the structure. So while the idea plays out, the fractal, the move up or the move down or whatever the basic pattern is, how high it moves up, how low it moves down, or how long it takes to play out, all that will be unique to the new iteration. So knowing that, we actually don't know how low this can go. The 1929 decline dropped something like 89 point something percent, if I'm not mistaken. So it's a large decline. Same with the C19 one. It's a large decline, but we don't know how that will materialize today. But we should expect a potential large decline, a potential intense decline like these fractals suggest. So what I'd like to do next is I'd like to look at the 10-year yield. I made a video, you can watch it here, where I talked about this very amazing correlation that took place back in 1929 between the 10-year yield and the Dow. And the strange thing is, we see the same thing happening again today. Let's take a look at the 10-year yield chart. Okay, so this is the 10-year yield chart, and I'm on a month candle. So I break the chart up into different boxes. This black line, or this black fractal, is essentially the chart. The chart is hard to read at this point with all these little dots, so it's a little easier to make sense of it. So from 1912 to 1920, I take this structure and I copy and paste it over here, so it repeats all over again. So from 1912 to 1920, it starts off low and then it goes to a peak. Well, the same thing happened between 1941 and 1981. If we take the next box, 1920 to 1928, copy and paste it over here, we see that it does the same thing. So this part is a little easier to read. The candles are a little more normal. So it starts from the peak and it goes all the way down to a trough. This took many years. It took from 1981 to 2020 for this part of the chart to complete. After this, from 1928 to 1931, and this is where the cool correlation takes place. So let's take a look at it. So in 1928 to 1931, it basically does a wave, if you will. Well, from 2020 to now, we have been doing the same thing. So what's interesting about this is that in 1929 is where it comes to a peak here, and then it starts its decline. Well, both the Dow Jones and the 10-year yield are following their exact same fractal that led up to the 1929 peak. And now they're about to embark on the declining part of that same fractal. Folks, this is just weird. I haven't seen this play out like this anywhere else. I think this is actually peaked out here, and it looks to be declining. Let's zoom in on a smaller time frame. Okay, so here we are on a week candle, and you're already starting to see kind of a big red move down. To me, this is looking like the beginnings of a decline. So just like in 1929, today's 10-year yield is doing the same thing. It's following the same pattern that it did in 1929. The pattern has stuck to its timing of as far as boom-bust cycles as it did in 1929, same with the Dow, and they're both in sync with each other. So if this is at play, we should begin to see a decline, and eventually it will bottom out, and eventually it will work its way up again. I don't know how high that will go. What I'd like to do next is I'd like to look at the S&P 500. Okay, so this is the S&P 500. I'm on a day candle. So if we take the same time frame from December 2018 to March 2020, copy that same fractal where it moves up to a peak and then the C19 crash. If we take that, of course, adjust it for the timing, height, and depth that comes after this part of the chart over here, we get the same structure playing out again, folks. And as you can see, the decline has already started. Now, just like the Dow Jones, it is possible that this is playing out on a larger time frame and it could be doing something maybe like this. But again, this decline, oh man, it's fast and furious for something that would be just a simple pullback. I would say that it does align quite nicely, at least some of the stuff over here once you drag it out over here. Maybe it will pull up, like I said before. If it is, we're going to want to see that happen soon. But the way this is falling, it's just like gravity is in complete control right now. Right now. We'll have to see how this develops. What I'd like to do next is I'd like to look at the NASDAQ. Okay, so this is the NASDAQ, and I'm on a day candle, and once again, take that same time frame, December 2018 to March 2020. We have the move up to the peak and then the C19 crash. We take this, adjust it for today's timing, height, and depth on this side of the chart, and bam, this is what we get, folks. Once again, the same thing looks to be at play, and it looks like we potentially have started on the decline as well. Maybe it's playing out on a larger time frame, such as this. But Like I pointed out on all the other charts, we need to see this move up. In fact, I would venture to say that this bounce is looking something similar to this. Of course, the way charts repeat, the ratios aren't necessarily going to be the same. So this bounce could play out higher up than it did this time, and maybe this part could be longer or shorter than it was originally on today's chart. So it expects some fluidity when it comes to how this exactly plays out. But yeah, it does look like it's following this so far. If it's not, we're going to want to see a move up take place soon. All right, what I'd like to do next is look at the Russell 2000. Okay, so this is the Russell 2000 or the RTY, and once again, take the same date range, December 2018 to March 2020, copy the same structure, the decline, and this is what you get, folks. The stock market right now is screaming, hello, can't you understand what I'm trying to tell you? They're all saying the same thing. They're all speaking in unison right now. Again, maybe this is playing out on a larger time frame, maybe something like this, but the way this decline is taking place, it's getting challenging to say that this is only this. Maybe it is, but we need to see some evidence pointing to that other than just a guess. Like, we need to see it move up and make a new, or at least come back to this high or this height. Right now, we're not seeing that. This looks like crashing kind of candles. Let's jump back to the Dow Jones. Okay, so here we are back at the Dow Jones. Now, how does this tie into crypto? I think we have several possibilities. One is that despite the potential it looks like on some crypto charts, on many crypto charts, that there is going to be a bull run, if this is playing out like this, and this is the beginning of the decline, maybe there's some other aspect at play, some larger macro structure that we don't know about because we've never been here before. We've never seen a true decline since crypto has been around. Maybe there's some macro structure that we're not aware of, and this time there is no bull run. That's one possibility. The other possibility is maybe it will pull up again, and this is not that decline, and when it pulls up or as it's pulling up, crypto will have a bull run. That's another possibility. The other possibility is that crypto decouples from the stock market, and while this is falling, we still see crypto do well. Already, at least at this point in time, it does look like crypto's actually sort of decoupled. It's held up quite well while the stock market has been printing candles like this. So I don't know how it's going to play out. At this point, it's kind of wait and see. We'll have to see how things develop. But I'd like to leave you with one thought. So 2 Timothy 1:7 says, "For God hath not given us the spirit of fear, but of power and of love and of a sound mind." You know, this is scary stuff. I'm not going to lie. This is not cool seeing something like this being a possibility. Maybe we'll dodge a bullet. Maybe it won't play out like we're seeing, or maybe we won't even have a decline. Maybe we'll just keep going up. That's always a possibility. But if something like this does play out, this is potentially scary. When I see things like this, I'm reminded of things like this. And this concept, a sound mind, you know, that's one of the virtues of investing. Another translation, another way this is translated, sound mind, is self-control or self-discipline. Again, that is a virtue in the world of investing. That comes, or can come, if you don't have it, it can come from God. God can give it to you. He can give you that sound mind. It's also another virtue in the world of investing not to be fearful. It's very easy to get fearful when you see the possibility of massive declines like this. In fact, I would venture to say that it's the natural inclination of us human beings to be fearful in situations like this. Yet God can give us the opposite. He can give us power, love, and a sound mind. So if you're looking at these charts and you feel fear, I would encourage you to reach out to God. He has literally the virtues of a good investor. No fear and a sound mind. Going through a challenging time like this with that kind of mindset is really a game changer. Folks, this is not financial advice. I'm not a financial advisor. But if you did find this video helpful, it'd be much appreciated if you hit that thumbs up button. If you would like to see more of this type of content and you're not yet a subscriber, I recommend hitting that subscribe button. I'll continue to follow up on these charts as they continue to develop. I also have a Discord where I'm very active on. It's connected to my Patreon. It's a $5 a month subscription. I'll put a link to my Patreon in the description of this video. I'm so glad you caught this video. I hope you catch my next one. Have a great day, and bye for now.